So we talked about it from a big picture, from an industry standpoint.
Yep.
So let's talk about what the forbearance plans means for consumer. And I'm going to use real simple math when
Yeah.
we go through this.
So let's say I can't make my mortgage payment. I realize right now I can't make my mortgage payment. What's the first step? What should I be doing?
Well, let's define what forbearance is first,
Okay.
and then come back and tell you what steps you should take.
Okay.
Okay. So unfortunately, the mass media has put out a narrative that isn't necessarily 100% true. They're not lying to anybody, but you're not getting the full story. So let me explain that. I think this is the post I made on Facebook that caught so much attention that you chimed in on as well, which is why we're having this conversation today.
And I got from that post, forbearance is not your friend. Like
Yes.
that's kind of the mantra that stayed in my head.
So I think the title or the headline was "Forbearance is not forgiveness."
Mm-hmm.
Okay. So the CARES Act was put out that basically encouraged all loan servicers to allow homeowners to go into forbearance without any financial means test. You don't have to demonstrate any hardship. Just got to raise your hand and say, "Hey, I'd like a forbearance." Okay. So consumers are being given forbearance without really understanding what that means.
Right.
Now, this partially false narrative that the media is putting out there basically goes like this. It says, hey, apply for forbearance. If you're given a 3-month forbearance, they'll just tack those 3 months onto the end of the note. No problem. You basically skip 3 months worth of payments.
And that's not what's happening though, correct?
If that was true,
okay,
I'd love to sign up for that too.
Yep.
But it's simply not true.
Right.
I can skip 3 months worth of payments. Yeah, sign me up.
Yep.
Oh, if that's the case, I'll buy 2 houses. So really, when you go into forbearance, and we have letters from, so I have colleagues all over the country, and we mastermind and network and talk about different ways to help our clients. So we've put together a bunch of different screenshots from different forbearance agreements that are offered by various lenders. So here's how it works. So this is the month of April. Okay, so let's say you request a forbearance, and the loan servicer grants you a forbearance for 3 months. So you don't have to make the April, May, or June payment. Okay, you're in forbearance for those 3 months. Come July 1, you're no longer in forbearance. Make the July payment. But what most consumers don't understand is the forbearance agreement says when you come out of forbearance and make that July payment, you also now have to pay the April, May, and June. So basically, you're paying 4 months worth of payments. You skip 3 months, but then you make 4 payments as one lump sum.
It makes no sense.
If you can't afford to make the payment for 3 months,
right.
How the hell are you going to make 4 payments at once? Okay, so here's where we come to a fork in the road, and I'm going to play devil's advocate here and play out both best and worst case scenarios. Okay, so worst case scenario first. Worst case scenario, you get that bill and it shows, well, now you have to make 4 months worth of payments. The vast majority of reaction is going to be, I can't do that.
Right.
Get on the phone with the loan servicer, and a couple of things could happen. It could be a loan modification. And by the way, none of this is written in stone. So all the loan services are basically saying, well, go into forbearance and we'll figure it out later. How the hell are you going to sign a contract that says we'll figure it out later? Okay.
Right. So that's one thing I've been saying to people is, listen, whatever you're being told, get it in writing, but maybe they can't get it in writing.
Yeah, exactly. So when that forbearance payment comes due, that lump sum payment is due, consumer can't pay it, get on the phone with the loan servicer. Possible outcomes that I see happening. Maybe they will defer it and take that 3 or 4 months worth of payments and just tack it on to the end. So now your 30-year note becomes 30 years and 6 months. Okay. Maybe similar to an escrow shortage. So if you're paying a mortgage, collecting money for taxes, insurance, your tax bill goes up. You haven't been paying enough in to pay the tax bill. Well, you have to make that up somehow. The loan servicer spreads it out over time. So
Yep.
that may be the same thing with the deferred payments. Okay, so you've got $6,000 worth of deferred dollars. Let's spread that out over 6 months. So your payment is higher by $1,000 for 6 months until you get paid, caught up. Maybe that's reasonable. Maybe it's not. I don't know. Or
it might be reasonable if at the end of this,
if you're back to work.
Yeah, and you're back to work at the exact same position that you were before, and I don't think that's going to happen. I think there's some businesses that have permanently folded.
Yep. Yep.
And
similar to last time around, I think what the net result is going to be in a lot of cases is a modification.
Right.
Okay.
Okay. So they do the forbearance, and then they realize in the 4th month they cannot make the 3 payments plus that 4th. Your suggestion is then to call the servicer and say, I need to part. Okay, what's your suggestion?
My suggestion is don't go into forbearance in the first place.
Okay.
Forbearance is a horrible idea.
Yeah.
I would put forbearance one step above bankruptcy. I'm not saying bankruptcy. I mean, it's the appropriate step for someone who really needs it. Okay.
So what about modification? Should they call and ask for a modification immediately?
I don't think that any lender is going to proactively offer a modification. I think they're going to put the default fallback position for the loan servicer is forbearance right now. Okay.
And then tell me how this impacts people's credit.
Well, exactly. That's exactly where I'm going. So
yeah, I thought something came out where they said, oh, you can do the forbearance and it's not going to impact your credit. And now I understand that's wrong.
Half truth.
Okay.
So the whole CARES Act, again, contrast to last time around, the Fed stepped in quickly, put the CARES Act together to try to help the industry as well as consumers. But there are a whole slew of unintended consequences. It's really, peeling back the onion. Okay, so let's peel back another layer. So let me give you an example, best case scenario. Let's say the consumer goes into forbearance for 3 months, and in month 2 or month 3, they actually do get back to work. Now they have the income. That forbearance lump sum comes due in month 4. They actually have the financial capacity to make that payment. Okay, sounds great. They pay that lump sum. They're right back on track. Great. Okay. What happens in that case, person's back to work. So Maryann, again, we'll use you as the example. You're back to work. Congratulations. And we see mortgage interest rates that are still at near all-time lows or even lower, record setting. Okay. And Maryann says, well, hey, this is a great time to refinance. I'm back on track. I'm making my payments. I can save $200, $300, $500 a month if I refi. Let's do it. So Maryann calls me. We get all the income documents. We take a look at her credit report. Wait a minute, Maryann, for April, May, and June, you didn't make a mortgage payment. Well, as part of mortgage qualifying, we have to prove you made your payment on time for the past 12 months. Now, maybe the mortgage servicer didn't mark you as being late, but when we're looking at that report, we can see no payment was made for those 3 months. So you weren't necessarily marked late, but because you didn't make a payment, we can't show you made 12 months payments on time because you didn't. You don't qualify to refinance. You won't qualify until you've made 12 months worth of payments. Now,
so that's a lot for homeowners, I think.
Yeah. So let me flip back again to worst case scenario. Okay. So you hit the end of forbearance. You can't make that payment. Okay. You can't pay that lump sum. So the CARES Act encourages, not requires, okay, because I've seen loan servicers already marking people as being late, even though they're in a forbearance agreement. So the loan servicer can still mark you as being late. But let's say that through the forbearance, the loan servicer does not mark you as being late. And at the end of forbearance, well, you can't pay that lump sum. So you're late for April, May, and June, and now you can't pay the lump sum for July. So that's 4 months worth of late payments. Maryann, what happens when you haven't made a mortgage payment for 4 months?
Can't get a mortgage, and you
get
possibly your credit score is hit. Yeah,
it's a notice of default.
Yeah,
That loan servicer has the ability to mark you late for April, May, and June. And then if you don't make July, July as well.
But isn't
And
it
technically,
3
they can
months?
file a foreclosure notice.
Yeah, 3 months. And then isn't there a clause in most mortgages they can call the note due?
That's exactly what I'm saying.
Accelerate the
Exactly
mortgage.
what I'm saying. So you haven't paid for April, May, and June, or July. So there's two things that can happen here. So the loan servicer could mark you as being late, and now all sorts of penalties on top of that. And they could file a notice of default at the courthouse, which is basically a foreclosure notice. Now, what happens in terms of your credit? So let's say they don't take that extra step. They don't actually file anything at the courthouse. You come to some sort of modification, some sort of workout agreement. And then you come to see me again once you're back and you're gainfully employed. You think you've righted the ship. Everything's cool. You come back and see me. Oh, you've got 4 months worth of a rolling late. You didn't pay for April, May, June, or July. Technically, that's a notice of default. Technically, according to Fannie Mae and Freddie Mac underwriting guidelines, you don't qualify for mortgage financing for the next 7 years.
Wow.
How's that for a kick in the teeth?
Wow. Okay.
Okay. So again, forbearance is not your friend. Forbearance is not forgiveness. The clinical definition of forbearance is it's a postponement of payment, not forgiveness. So
Right.
as a consumer, you really got to figure out when is it postponed until, and how do you catch up on that postponement? Is it a one-time lump sum payment? Is it like the media narrative is just tacked on to the end of the note? Is it going to be small increments paid up over time?
If it was tacked
Loan
on to the
servicer can
end
do
of,
it any which way they want.
I'm sorry, I don't mean to interrupt, Patrick. If it was tacked on to the end of the note, and correct me if I'm wrong, wouldn't that be more, isn't that a modification of the loan? More of a modification?
Technically, yes. So a forbearance in and of itself falls under the umbrella of a modification. You're altering the terms of the original contract, of the original note. Okay, so every time you alter those conditions, repayment terms, times or amounts of repayment, technically, yes, that's a modification of the note.
And let's say when I go into this, so before I miss a payment, okay, it's April, and I miss April's. Let's say it's the beginning of April. It's April 1st. I know I'm gonna miss the payment. What happens, and when will it impact my credit, and how? So April 15th, doesn't something happen,
Yeah.
or April 16th, I go into a different loan category?
Not necessarily. So in the
Some kind of
U.S.,
mark?
yeah, in the U.S., the way the mortgage industry is created for residential transactions is that mortgage payment is due on the first of the month.
Right.
You have up until the 15th for the loan servicer to receive the payment without any financial penalties to you. So as the consumer, as long as you send that payment and as long as the loan servicer receives it on or before the 15th, you're good. If they receive it on the 16th or after, there is a penalty which is equal to 3% of the principal and interest amount.
Okay.
Now, if you pay on the 17th or 18th or 20th, as long as you're paying that 3% penalty, you're good. Now, if the payment rolls into the first of the following month and they still haven't received payment, that's when they can report it to the credit bureaus as being a mortgage late.
And if you're 1 month late, what happens? Like, what if I have a 750 credit score? What's going to happen on the 31st day or the first day of the next month?
So a lot of times there's a lag time from when you
Yep.
take an action, whether make a payment or not make a payment, from when that's actually going to appear in a credit report. It could be anywhere from 30 to 90 days. Okay, so if you missed the April payment, I might not necessarily know about it until June or July if we're pulling a credit report at that point. Okay, but having a recent mortgage late, unfortunately, the credit bureaus, their credit scoring algorithm is proprietary. We don't know. I can't tell you if you miss it, it's going to have exactly a 100-point difference in your score. But speaking from knowledge in the industry, yeah, your score is going to tank probably 100 points or more.
For just the 1 month or all 3 months?
Oh, if you have 3 months, you're
You're done.
hundreds, S with
Yeah.
an S, hundreds
Okay.
of points difference. You know, and it really depends on what everything else that's going on in your credit report as well. Obviously, in the mortgage industry, we're more focused on the mortgage payment history and the mortgage credit report we get. So that's another sort of misconception in the credit industry as a whole. Mortgage credit reports are different than consumer credit reports for credit cards or things like that. And that's also different from a credit report used for auto loans. So there's different types of credit reports, and those different types of reports have different scoring ranges,
Mm-hmm.
and there's different weight placed on different types of accounts.
All right. So that brings me to, you're in forbearance. Let's say you can't make your payments. You're in your 4th month. And maybe you try for a loan modification. Let's say you get rejected. What should people proactively be trying to do at this point?
Great question. And there's a lot of unknowns. I mean, we don't know how these forbearance plans are going to play out in the future. So everything I'm talking about is, some of it is fact, what has already happened, and a lot of it is my prediction as to what's going to happen in the future. Okay,
Right.
based on what I saw in the last cycle. Okay, so what's going to happen if you're coming out of forbearance and you still can't make the payment? Well, again, you shouldn't be going into forbearance unless that's sort of your last resort. So please, if you're currently employed, if you're working from home, still getting a paycheck, don't think it's free money. Don't think you just get to, skip a payment. Keep current on your payments. Forbearance is an option really for people that truly have some sort of financial hardship. Even
Yeah.
though anybody can get it right now, not everybody should.
Right.
All right. So if you've gotten a 3-month forbearance or a 6-month forbearance coming up to the end of that, you're still not in any better financial condition. Well, before that's over, you got to proactively reach out to that loan servicer, contact them and say, hey, things are still not great. I come out of forbearance. I'm still going to be in a tough spot. Can we extend the forbearance? Now, written into the CARES Act, we've been using the example of 3 months. So in the CARES Act, it's actually 6 months. Okay.
Okay.
So when you apply for forbearance, you get a 6-month forbearance, but there's also an option to extend that for an additional 6 months. Okay, so you actually could go, the way the legislation is currently written, you could go up to a year with forbearance payments.
And
Now,
yet, the more I'm listening to you talk, like, I would obviously you wouldn't suggest anybody go beyond the 3 months. Like, if you can
that's,
do that 3
again,
months and pay that 4th, get out.
exactly. So even though it's possible, it's not recommended. And again, I'm putting the forbearance basically one choice better than bankruptcy. Okay, I'm not knocking bankruptcy for people that need it. That's a financial mechanism to help them. Okay, but forbearance is not just something you decide to do on a whim and say,
Mm-hmm.
oh, this is easy. No, it has long, deep reaching financial impact. Now, another sort of anecdote for you, there are some loan servicers now that are just having sweeping changes and giving forbearance to people that really didn't even ask for it, believe it or
Mm-hmm.
not. So the post that I made on Facebook, which again led to this conversation, I had a client that saw that, who before he saw the post, contacted his loan servicer just to ask questions, just to figure out what does this forbearance thing mean. So he was on his account online, scrolling through. He doesn't remember doing it, but apparently he must have clicked on something to request a forbearance. They canceled the direct debit payment out of his account. Now, this is April, 7th, 8th, 9th?
Yeah.
So more than a week past the first of the month where the payment should have been taken out. After he saw my post, he went back and looked at his accounts and saw that his loan servicer had actually put him into forbearance and had not taken the payment out for that month. Now, he was able to jump in and rectify that and and terminate, being in forbearance to make sure he's paid on time, because, he wants to be able to buy another house or to refinance at some point in
Right.
the future. He doesn't want this, and he's still gainfully employed. He didn't need it. He wasn't even asking for it. They gave it to him. So it's, I don't want to say it's loan servicers playing dirty here, but I think what happened last time around, once the dust settled, there are quite a number of loan servicers that did get federal money for helping people go through modifications, helping people go through forbearance. So the sinister side of me is saying, well, there are loan servicers there that are putting people into forbearance now. It may cause a short-term cash crunch because they still have to pay the investors, but if they can get through it, there's a huge payday from the feds a little bit further down the line. Whether that's true or not, I don't know. I would like to think that it's not, but just from what I've seen from consumers and their responses to being put into forbearance without really, they're asking about forbearance, not asking to be put into the program. They just wanted to understand it, and they were put into it without really consenting or understanding what they were signing up for.
Right.
Again, and I blame the media. I blame the media. That's the narrative out there. Hey, just skip 3 months, skip 6 months.
On both sides.
Tack it on to
the
end.
Media on both sides is just awful.
Now here's another, so here's just a wacky set of circumstances. So again, I've got colleagues all over the country. We network and communicate on how to best serve our clients and different, marketing ideas and things like that. So it hasn't happened with any of my clients, but some of my colleagues are reporting that there are consumers out there that they're working with that have a loan in process, haven't closed, so they don't have the keys, they don't own the house, and they're already asking how they can go into forbearance once they own the house. So if you're buying a house...
Well, then don't get the loan.
Well, exactly. If you're buying a house and you automatically want to go to forbearance, maybe you're not ready to be a homeowner.
Right.
Okay.
Right.
Now, to make matters even worse, there are some, I don't want to call them advertisements, but essentially Facebook posts from real estate agents that are promoting that as a benefit. Hey, buy a house and you don't have to make payments for 6 months. It is such a twist on what's currently happening.
I actually can't believe that's legal. Like, I don't know how that's legal.
Oh, no, it's 100% not. So I'm not saying it's okay, but it's happening.
So what's your projection? So the one thing I'm keeping an eye on is the unemployment rate. So
so that's actually some of the stats I have.
Unemployment rate, it's got to be at least doubled from what we had from 2008. Even though I think our situation now is
more.
Essentially going to be, fingers crossed, shorter. But I just don't think everybody's going to immediately go back to work and everything's going to be hunky dory. It doesn't.
So let me give you the stats here.
All right.
So, and quickly, I got to give a quick shout out, if you don't mind. So I have to give credit to a lot of the information that I've gathered, a lot of the data. A friend and mentor of mine in the business by the name of Barry Habib. So he runs a company called MBS Highway, so mortgage-backed securities, which is where all of the mortgage money comes from. So Barry has been a huge champion for our industry, for loan officers as well as real estate agents. So a lot of the data that I'm pulling, I'm going to cite Barry as my source. So hopefully you see this, Barry. Kudos to you. Thanks, pal. In the U.S.
Does Barry have a public website? Can you throw that?
Oh, absolutely. So wherever you post this, you can tag him as well. So he's got a Facebook page. It's Barry Habib, Habib. And the name of the company is MBS, as in mortgage-backed securities.
Yep.
Highway. So if you look at his profile, he's, mostly on Facebook, but he's got LinkedIn and all the social media.
Once we get this up on YouTube, we can put it in as one of the links down below as well.
I know that he'd love that. So if there are any, mortgage industry professionals that are watching this,
sure.
If you don't subscribe to Barry's stuff, you're out of your mind. Okay.
Now I want to subscribe.
Yeah, you're not doing a very good job for your client if you don't subscribe to this.
Sure.
So anyway, Here's the information that I was able to glean from Barry's site and the information and content that he puts out. So in the US, there are 164 million people in the workforce. Okay, so that's the stat to start with. Prior to COVID-19 hitting, there was about a 3.5% unemployment rate. So just shy of 6 million people. Rounded off, call it 6 million. Okay, that was the unemployment rate before COVID-19 happened. Okay, as of April 10th, they added, so the unemployment ranks added an additional 22 million people. Okay, so as of April 10th, it was 28 million people filing for unemployment. That's about 17% of the workforce. But it gets better, or maybe
I'm not an expert, but 28%. I mean, is that back to?
I'm sorry, 28 million, which is
28 million.
17%.
17%. Okay, thank you.
Yep, 17%. So
that's probably one of the largest. I mean, 17% back in the 80s.
This is more than the Great Depression.
Great Depression. Okay, so we're surpassing the 80s. We're back to the Great Depression. Okay.
Exactly. Yeah, we're blown, and we're not even close. We're blowing all those numbers out of the water.
Wow. Okay.
So the jobless claims come out on Thursday. So we're recording this. What's today? Tuesday. So we don't have this week's numbers yet. But based on the initial predictions, it's likely that later this week the stats are going to be just over 20%. And before this all settles down, just about everybody out there is predicting about 25% unemployment. So take a look at the Great Recession, the Great Depression. The numbers were half that, less than half that.
Yeah.
Now,
scary.
That being said, everybody's predicting a much sharper recovery as well, that we should get back to the same levels of employment that were in place in, January, February, before COVID-19 in about 2 years. Now,
right.
If you're part of the unemployed, 2 years is a long time, but in the grand scheme of things, recovery in the economy, 2 years is a pretty short window.
Wow, this has been unbelievable. Such great information, and I really appreciate it all, Patrick. I'm going to hit you with my big question now.
Okay, hit me with it. What's up?
Which I didn't present to you, but I'm curious. I mean, with all of this, I'm going to. I have an idea, but I'm curious. What about short sales? Do you think we're going to see a spike after all this?
I don't know, but my gut tells me not as much as we saw last time.
That's what I was saying too. Not as much as 08, but
because I mean we still have huge demand. Okay, there's still such a limited inventory. Last stats we took a look at, which again was just prior to all this hitting, was we were. And of course, it's regional, so every region is different. But
right.
Under a 3-month supply, less than 3 months worth of supply of housing. So we're in the, I think fair to say that the Metro Boston area. Okay, the general description of where we are. There's still a huge demand for housing. Okay, there are significantly more buyers out there than there are homes for sale, even despite the health concerns. So I still have clients that are out. There's no open houses, but they're doing individual private showings all weekend, every weekend, bouncing from house to house,
right.
Prearranged, scheduled visits. There are still clients that are putting homes under agreement. Closings are still taking place. So I think that we do have a number of consumers out there that still have a strong equity position. So where I think you're going to see the short sales happening are going to be the consumers that purchased recently, we'll say within the past 3 years, and use a loan product with a minimal down payment, 3%
FHA,
or maybe 5%. They don't have that equity position. They've suffered some financial losses from being laid off. Maybe they did apply for forbearance. Now that lump sum is due and it's putting them upside down. I think that's the target market for where the short sales are going to be.
Right.
You know, so anybody that bought their home, you know, 4, 5, 6, 10 years ago, just with the run up in appreciation, run up in values, I don't think they're going to be in a spot where they're going to need to do a short sale. And they're
Right.
going to have enough equity that, at least I would
They
like to
can just
think,
sell
that
it
they're
as a
going to want to stay in
traditional
the house.
if they have to, right?
Yeah. Yep.
So, well, Patrick, I want to thank you for coming today and allowing me to pick your brain about all this, because I do find it fascinating.
Sure.
I think it's going to be excellent information for, you know, certainly my audience, but anybody right now. I think this is excellent information for anybody right now that even has a mortgage and, you know, that may be struggling to make these payments. A little personal story. I was so proud of my niece a few weeks ago. She said, I'm taking my stimulus check and I'm going to pay my rent or her mortgage. And she put this long thing up about don't waste this money if you have it, and try to continue to make your payments, because the repercussions obviously are not what you may think.
Don't follow the Tiger King model. Don't go out and buy a tiger with your stimulus check, please. Pay your mortgage.
No, let's not do the Tiger King.
Yeah. So just remember, forbearance is not your friend.
Forbearance is not your friend.
It is, I don't say a financial last resort, but think of it as one step above bankruptcy. That's how significant of an impact it can have on your credit. That's really the overriding sort of theme that I want to get out to everybody.
Awesome. Thank you, Patrick. I'm gonna, you know, I'll hit the end of the recording right now, but I'm gonna send you a copy of this when we're all done and let you know where the links are. I appreciate you coming on. Is there anything else you want to add? Tell us how people can reach you.
Yeah, so like we talked about at the beginning, I'm the Wicked Awesome Loan Officer, and that's actually my landing page, my webpage. So wickedawesomeloanofficer.com.
Just Google Wicked Awesome Loan Officer.
Yep, and my shining face is going to show up as a result. Yeah, so online, that's a good way to get me. Of course, I'm all over Facebook. Cell number for a call or a text, 781-888-5678. Or again, just Google Wicked Awesome Loan Officer, and I'm the only one. So
yep, me too. Google Short Sale Goddess. It's just me.
All right, there you go.
All right, thanks, Patrick. Have a great day.
All right, bye.
Bye.